Good day, learners. Okay, so this is your support material for accounting grade 10. I'll be doing the media exam question paper for last year. I hope this prepares you well enough to be able to write your exams, guys. So I'm just going to do the best of my ability to explain each and every question, transaction in the question paper. And boys and girls, you must know that this question paper is just a guide for you guys to be able to tackle the questions in the exam. It's not that you will definitely find what is written here. You might find that the structure is different, the questions are different, the transactions are different, right? So it's just a guide. So which means that you might find them asking you in a different way. So you must be prepared for that. Which is why I always encourage learners not to cram when they are studying, because you need to apply your knowledge when it comes to this. So I'm gonna teach you the tricks and methods that you can use in order for you guys to be able to get into the exam and answer the questions in a relevant manner, according to what it's been asked, not what you have crammed, right? So I hope you do understand where I'm trying to get with this. So fine, here we are looking at last year's question paper, media exam, right? As I told you guys, it's a 2.5-hour paper, 200 marks, right? So we'll just get to the question paper. So here's my answer book. I'll be doing all the answers in here. Remember, when you're starting to write, you must not forget these details. They're very important, right? As you can see, it's 200 marks. So the first question is 45, 30, 40, 40, 45, right? Right, so before we start, I'd like to just tell you guys that there's simple rules that are there for you guys in order to master the entire question paper, especially question 1 up until, I think, yeah, it's question 1 up until question 4. You just need to know the dead click rule. You just need to know that. As much as it's simple, and you guys do not like to write it, you do not like to write the T accounts, the pluses and the minuses, that's where you lose it, right? So you mustn't do that. You mustn't lose those basics, because from start to the end, it's that in the question paper. I feel like it's mostly that. You just need to know the dead click rule, and then each and every transaction. I'll say it again during the video, that each and every transaction, it's 2 accounts that are affected. So you need to know which account is it debited and which account is credited, whether the account is increasing or whether the account is decreasing, and therefore you are able to move on. With that, you can analyze the important information in the transaction, right? Okay, so let's start. We'll start with question 1. But you must read all your instructions and look at the minutes and the marks that they've of each and every topic for the questions. So you measure yourself, you don't spend too much time on a particular question. Right, so question 1, concepts and analysis of transactions, right? It says, let me just zoom in. Right. It says here match the description in column B with the with terms in column A. Write only the correct letter to next to the question number in your answer book. Right. As I told you, here's my answer book on the side. Right. So column A is the description. Column A is the terms. Column B is the description. So question 1.1.1. So here they are asking us about the gap principle. Remember, now in your scope, I gave you the scope. So so it's gap principles. I think in concepts, right? So one of the gap principle is the historical cost concept and the going concern concept. These three are the accounting concepts, right? So historical concept from when I read told me about if an asset is bought at the original cost, it will be recorded, the original cost will be recorded there, whether the asset loses value or the asset increases in value, right? So, right, let's find out which one is it. We see what I've just read that fixed assets are recorded at their original cost price. So C, so 1.1.1 is C. So we go to our answer book, and then we have C there, right? And then current assets, right? Remember, current assets is assets that can only last for within a year, and assets are valuable possessions of the business, right? So we can just simply scratch out C because we have answered that one. So now we are looking at A, B, D, and E. So so here it says D says these assets can be converted into cash within 12 months. Right, they are speaking about assets, they're speaking about 12 months. Right, let's see if we can get another one that speaks about assets that are within 12 months. There's no other one, so which means 1.1.2 is D. Right, and then trade discount. Trade discount says a deduction offered to promote bulk purchase. Is it? Right, right, a deduction, right? Remember, in a discount, you get a deduction from your purchases. And then this one says believes, so it cannot be that. And then this one says foreseeable future, it cannot be that. So 3 is E. Right? And then 1.1.4 says going concern principle. Going concern principle just basically means that the financial statements are set up in a way that, you know, the business would continually still do business in the following year. So it is B, where it says believes that the business will still operate in the foreseeable future. So that is A. And then ethics. Ethics believes that distinguish right and wrong. Obviously, right. So here I've answered. I've got all my 5 marks clean. Right. So now I can go to the second question of question 1. Right. It says analysis of transaction. Question 1.2 says the following transaction for May-April 2025 appear in the books of Majola Traders. The business maintains a gross profit markup of 40%. That's important, right? On cost. Right. You're required to analyze the following transaction according to the headings in the answer book. Note that the business has a favorable bank balance at all times. Example, right? You're given an example of how you need to answer in the answer book. Right. The first transaction that you're given an example of is the one where it says paid as Kunene 650 for the monthly rent, right? As I told you before, right? When you're looking at a transaction, boys and girls, you must know your dead click. Right? Right. Here is the dead click. Obviously, we debit expenses, assets, and drawings. And then we credit, liabilities, income, and capital. So which means that if an account that is classified as an expense, it will increase on the debit, and obviously on the opposite, it will decrease. And if an account is classified as an asset, same. If the account is a drawing, the same, like that. And then if account is classified as a liability, and income, and capital, it will be like that. All right. So when we read the transaction, we must identify two accounts, right? The most simplest account to identify is when they've used cash, right? Where the cash is received or cash is spent, which means paid, bought, or purchased, right? We know that bank is involved. So the first account we know just that the bank is involved, right? So let's look at the example. It says, as paid, paid as Kunene 650 for monthly rent, right? As I told you, when the word or when they talk about cash, right? So sometimes they wouldn't state explicitly so that it's cash, you know. As you can see, it says paid as Kunene 650 for the monthly rent, right? So we paid as the business, right? So in this case, as the business, we paid. So, and we paid, it never said that, you know, we took time, we paid, we actually paid. So we are looking at the bank without wasting time, right? This is my bank, bank is an asset. This account is classified an asset. So it increases this side, decreases this side, right? And then so we paid. So the 650 will go on the negative side, right? And then you know, double entry principle follows after, right? And then this account, I don't know, right? Let me find out what this money was for. It says paid as Kunene 600 for the monthly rent. So this money was for rent, but it was a rent income or rent expense. It was rent expense because as a business we paid. So incomes are classified. Rent expense. No. Yeah, it's an expense, not an income. Rent expense. Expense is classified as an expense, so it will increase this side and decrease on this side. There's your double entry. Is my accounting equation balancing? Yes, right? When I look at my asset, it's a negative. When I look at my owner's equity, right, owner's equity is affected by two accounts. Owner's equity is affected by incomes and expenses. Incomes, they add on owner's equity. Actually, I was supposed to have put this on like this. Expenses decrease owner's equity. Incomes, they add on owner's equity. And obviously, liabilities would be an obligation to pay. So in this transaction, we never had liabilities. So this is identified as expense. Right? As I said, expenses decrease my owner's equity. My asset was affected negatively because money went out of my bank, which is why we are seeing a negative there. So I have under liabilities a 0, so which means now a negative under assets, a negative under a negative under the right hand side and a negative under the left hand side. So my equation is balancing. So in actual fact, I've done proper recording of the transaction, or sorry, analyzing of the transaction. Right, as you can see in the example, it states that. So we must debit expense. Did we debit the expense? Yes, we debited the expense. And then which account to credit? We've credited what? The bank. As you can see, I know this is an example, but it's very much important for you guys to know this. Right, as you can see here, some formats are different. They'll tell you to maybe, so this is an example. So they are telling you that when you come to the accounting equation, you must write negative and the amount. Remember, don't put currency, just write the amount that it is, because you focus on the currency and some of you forget what you call additional zeros, or not zeros, but not writing the amount in full, and that will cost you, right? So as you can see, I have a negative 650. Under assets, the classification of assets, I have a negative 650 under the classification of owner's equity, and obviously liabilities was not affected. As I showed you, now at the end, it will show that there's a negative and a negative under owner's equity of the same amount. I just didn't write the amount here, but here they're giving you an example of how you should do it in the test, right? They will always give you an example of how you should do it, and you should always follow the example. Right, let's go to our first transaction in our question. So, and this boys and girls is worth 40 marks. Imagine 40 marks. Look at the table, right? Look at the table. 40 marks, guys. So we cannot lose these marks because I believe we know our dead click rule, right? There we go. Right. The first transaction says bought stationery from JB Stationeries for 400 and paid by EFT. Right. Now we are looking at the keywords. Okay? The most simplest transaction that I told you is that when they use cash, and when they use cash, which means bank is involved, right? And in this case, they did. They said paid, bought, and they used in the same transaction. We see bought and paid by EFT. So money went out in our bank account. So we'll just grab somewhere where we can work on, or you can have a what's this? You can have you can work on the question paper, but I like to work on a piece of paper where I can do all my calculations on. So okay, fine. It says bought stationery, right, from JB Stationery for 400 and paid by EFT. This should tell you that money was used. So if money is used, it is money in your bank account. Okay? You must do these the 2T's account, the 2T account. Each and every time, you must have 2T accounts, right? So we say bank is an asset, increases on the debit side and decreases on the credit side because we are following the dead click rule, right? Bank is classified as an asset plus this side minus this side. Okay? Just write it again. I like to write it so that it guides me each and every time. As you can see, there's our assets. Bank is classified as an asset. Okay, so when we are here, the simplest thing is to do is to if I get money, I'll write on the plus side. That's actually obvious. I can write on the plus side because I received money. But in this case, I didn't receive money. Money went out. So I need to record the amount on the negative side. And this side, all of this side is the negative side. They are separated with this line, right? And then when we go and do the double entry, it says for every credit, there must be a debit. In the second account, I do not know that account, right? Yet. We'll find out soon. So here's my credit, here's my debit. So the double entry is like for every debit there must be a credit, and for every credit there must be a debit, right? So it's just like for every right foot you make, you must do a corresponding left foot, right? So remember, when we are recording a transaction, we are trying to find a balance, and when you're walking as a person, you are in balance. So because if you're not in balance, and then things will collapse. Just like how we are supposed to record in our accounting equation, we need to strike that balance. So if I have made a credit entry, the following entry must be a debit entry. And now let's find out what is my account. So I can classify the account, and so after classifying the account, I can know where it increases and where it decreases. Now it says bought stationery. So first question, yes. So number one, we identify that bank was involved. And number two, we knew that money went out. Now the third one is that what what was the money used for, right? Or what was the money for, right? It says bought stationery. So this is what the money was for the stationery. From JB Stationeries, this is the person that we bought it from, right? For 400, right? So which means my second account is what? Stationery, and my stationery is a expense. Increases on a debit, decreases on a credit. There's the expense. Can you see? Right, so we are done. So how do you record this? You have this information. You know which account was credited. You know which account was debited. And when you come here, account debited, is it stationery or bank? It is stationery, right? Because there's an entry on the debit side. Account credit is bank. Similar to what? To the first transaction. What do we see? A negative 400 under our assets, because bank is an asset and it has affected, this transaction has affected my assets negatively. And then under owner's equity, remember under owner's equity we said what? We said owner's equity is affected by incomes and expenses. So in this case, stationery is an expense, so we'll see a negative what? 400. Our liabilities is not affected with those. Right. I'll end here for now and continue later on. Just try and do the others on your own and see if you are able to answer them. And then you mark yourself afterwards. All right, boys and girls.